these days of putting together these webinars, and we put this one together relatively quick over the weekend. And there were several requests about this, as well as an interest I personally have. Thank you for your attendance for this. And this is Demystifying the CARES Act, featuring John Rizzo with RDG and Partners, Dan Matteo, RDG and Partners. And I asked earlier today, Sam Goelli with GRB Banking to join us, because they are a SBA lender. There are other SBA lenders throughout the nation. And it is one of those areas, though, that as banking learns about it, some of these things you're going to be able to apply online. Some of these things you're going to be able to actually do through banking. One of the key elements that we're going to talk about today, and when I hand it over to John and to Dan, as well as Sam making some comments, is that a lot of this is all brand new. And it is new for John and Dan, as well as Sam, and things are ever evolving, and you'll probably hear them say that a number of times. So we're going to go ahead and move forward here, and let me just put here. So today we are going to do just a quick welcome, and then we're going to get jumping right into it and then do some questions and answers. Thank you all for all of you people who have put questions and answers in. It was very helpful, and it is well appreciated. I will have Hans, who is our head of marketing. Hans will be sorting out any questions that come through the chat and passing them on to me. So we're going to probably not be answering questions directly from the chat as much as Hans, our marketing guy, will be capturing those questions and passing them on. This is being recorded. This will be not only recorded, but anybody who has registered for this, we will send you out a copy, and we will also have it up on our website for the future, in the near future. So with that said, we're going to move forward, and I want to do some introductions. You'll see on your screen here, we have John Rizzo. John is a CPA managing partner at RDG and Partners. And John and I have known each other for many years now, and has been a substantial individual in the Western New York community when it's come to leadership around the financial marketplace, accounting marketplace. And I've learned to depend on John in a very trusted manner, trusted way. A couple of years back, I had an opportunity to meet Dan Matteo. Dan has worked greatly with our organization, and he has also been very steady in helping bring some very strong intelligence to the financial elements of our businesses through the child care, as well as Inspire Care 360. So I'm glad to have Dan join us also. Finally, on the phone, we have Sam Goelli. Sam's face, unfortunately, is being shy today, but Sam won't be joining us by video. Sam is the Senior Vice President of Commercial Lending with Genesee Regional Bank. Sam and I, actually, I probably played baseball with Sam when I was 6 years old forward, because Sam is someone I actually had grown up with, but he's been a lender that I have worked with for a number of years, and probably one of the very best in the business in the region. So I welcome all of you and joining us. And so with that said, John, I'm going to start to hand it over to you, because I know there's a number of topics. I know you've been consulting with your customers and your clients. We are talking mainly to child care, early learning, private school, Montessori school owners, operators throughout the nation. And so they're very interested in understanding more about the CARES Act. So welcome, John.
Great. Thanks a lot, Tony. Thanks for the introduction. I'm sorry I can't bring the tan that was in that picture you put up there of me previously, but
come on, man.
This is the best we can do in upstate New York right now and the last day of March.
Yeah.
But I appreciate it. There's a lot of questions about the topics that we're going to discuss today. Dan and I have been on the phone nonstop for the last week and a half trying to answer our clients' questions. So it's great to get a whole group here, an audience, to discuss this with you and try to help you with some assistance here that exists. I'm going to share my screen.
Okay.
I just need Tony, you to help me with that.
Okay, I'm going to stop sharing, and that should allow you to share.
Okay. Okay, so I'm going to start with, we're going to talk about the different loan programs that exist right now and mainly focus on two of the programs, but I want to take you first to this great resource. So both of the loan programs that we're going to talk to today are in conjunction with the Small Business Administration. Like Tony mentioned, one will be administered through your bank, and we can talk more about that with Sam. And the other is handled right here, right on SBA.gov. So this is also a great resource for all sorts of information relating to assistance and lending. And I know we're dealing with this in the middle of a coronavirus here, but this is actually a great resource otherwise. So if you go right to SBA.gov and you just click on here, learn more, it's going to take you to this section here that has more information and a resource guide on coronavirus itself. So we're going to talk today about the Paycheck Protection Program, mainly in the economic injury disaster loan and loan advance. So let's talk about the actual loan and the loan advance. So if you go here, right now, this was the first loan that was introduced, and actually our firm had a lot of experience with this after 9/11. These economic injury loans and disaster injury loans are always available whenever a disaster is declared. Now, this loan is actually an economic injury disaster loan, which is different from like a physical disaster loan. So when you go through this, the first part of this loan, which is just launched yesterday, is that it includes a $10,000 advance, which is basically considered a grant. So that's kind of a game changer with this loan. For those of you that may have looked at this before, we started actually helping clients prepare these applications for the economic injury disaster loans over a week ago. And this is the third change in the application that the government has made since this loan was introduced. The biggest part of it now is that there's a $10,000 grant. These loans are available. They're more or less working capital loans, and they're up to $2 million. And basically how they work is the loan part of this will be determined. You'll have to show damages. And how the government kind of reviews damages, from our experience, is that they will look at your financial statements, say pre-disaster, and then they will look at your financial performance and financial statements after the disaster and try to calculate how you were impacted. Now, what things are they looking for? When they look at your financial statements, they mainly are going to focus on your accounts payable, any of your debts. So if your debts were, say, $100,000 before the disaster, and now they're $400,000 after the disaster, then that could equate to a $300,000 impact, and you more or less could get approved for a $300,000 loan. Now, the specific underwriting is handled directly by the SBA themselves, and we don't know all the specific details and how they underwrite, but that's just a simple example of how they look at these. So this is the economic injury disaster loan. If you click here, it actually takes you to a very simple application now. So before, this was multiple screens and multiple attachments, and it was quite involved to complete the application. Now you basically go through these 5 sections to complete it, and they're fairly simple. Now, we won't be able to, I can kind of take you from the disclosures to the business information to give you an idea.
Hey, John.
Yes.
I have a quick question for you, and I'm going to sprinkle some in here from questions we have. You mentioned a lot of this about liabilities as where this one plays a role. One of the things is a lot of our owner operators have child care centers. Some people are completely closed down because the state has requested them to close down, so they are bringing zero revenues in. Others, similar to myself, have highly abbreviated enrollments joining. So for instance, we have about 20%, if that, of attendance And so we have a number of people who have unenrolled, so we're highly affected that way. Does this loan cover elements of that in addition to what your expenses are, what you're paying out?
Yeah, lost revenue certainly is looked at because they ask for your financial projections as part of this. So when they view your financial projections compared to what your actual results are, and obviously most people will be down, that would be a factor in the loan. So a lot of this is it's you should already be keeping good financial records, but this is really just a reminder of that too. Not every company does a financial projection. Not everyone keeps their books up to date routinely. So this is the time when you certainly want to make sure that your information is up to date, because a lot of this stuff is moving very fast too. So yeah, lost revenue would be a part of it, as well as the increase in your liabilities. And those kind of go hand in hand. If revenue isn't coming in, then your liabilities will probably naturally grow because you don't have dollars to cover those costs unless you're dipping into your reserves.
Cool. And one thing is I'll let you get going here again, but I think a lot of people are also interested in some of the conditions of, if you apply for one, you may subject yourself to not being able to apply or qualify for a different, solution. So maybe during these, you can address that too.
Absolutely. Yeah, that's on our agenda for sure. And we will certainly cover that. And that is where a lot of confusion is coming in. So if you go here, so the grant portion of this application, which is up to $10,000, that's very time sensitive. There's $10 billion that was awarded nationally for these grants. And we've been actually preparing these grant applications for our clients over the last almost 2 days. And we've found that almost 600,000 applications have already been submitted. So time is of the essence if you're interested in applying for this grant. So here's where you apply for it. Like I said, it's a fairly straightforward application. So I'm just going to make some assumptions here on some of these questions just to at least take you to the next screen. So when you get to the business information, you can see it's fairly straightforward information: business name, trade name, a federal ID number, the type of organization you are, and this is a drop down, so you can pick what type of organization you are, if you're not for profit or not, if you're a franchise or not, and only the items in red with either a red star or a red line on the side you have to complete. You'll need your gross revenues for the last 12 months prior to January 31st. So this is, what goes to my point about keeping your books up to date. And then cost of goods sold in a lot of cases is zero for several businesses, depends on your type of business. These items you don't technically have to complete. And then the rest of it's just address, contact information, when the business started, what the current ownership is, the type of business you're in, the business activity. And under that, it would have childcare as the detailed business activity, and then the number of employees that you have as of January 31st. So this is business information. When you advance to the next section, it will be owner's information, which is exactly that. It's name, address, social security number, your cell phone number, your email address, things like that, what percentage of the business that you own. The additional information is more or less questions regarding your criminal past, if you have one, because SBA has pretty stringent guidelines on, ex-convicts and everything, as far as if you qualify or not. And then there's just a summary, and you hit the button to send. So this application shouldn't take you any longer than 15 or 20 minutes to complete.
Hey, John, a question for you. One of the things is I went through this myself, and I recognize that we have a lot of owners who have multiple centers, and those multiple centers are under multiple, or likely, not often, not always, but multiple tax IDs, because they bought each center as a different company or entity. What is your recommendation when applying? Should they be choosing one and disclosing the other? Should they just only choose one if they're going for the grant? How do you want to negotiate that when you have multiple locations?
Yeah, so the application asks for the business name and the business federal ID number. So if each business is wholly owned, say separately, then you should be completing an application for each business. If
Okay.
if you have a parent company and then you have that parent company is the actual owner of individual LLCs, which is another way to set up, then you would have one application for all of them.
Okay. Very
So
good.
that it just depends on what your corporate setup is like, but we could also assist with, looking at your situation and helping with that.
And Tony, I don't know if you can hear me. This is Dan.
I can.
Okay, great. The SBA has aggregation rules. So, the application process is pretty vague in terms of how to apply for that in that specific situation if you have a parent company or subsidiaries. But eventually, when you get to the actual loan application process, they're going to be asking for, the ownership across all your entities and if it's related in any way. So that will happen, after the SBA follows up with you after the initial application. But, we've been looking at applying under the EIN for that matches the tax return.
Okay, great. So one of the things we're going to do is we're going to share RDG and partners information at the end of this. And we will also send out their information if you're seeking any type of support so they can be helpful in that area too. Thanks, guys. Why don't you continue?
Okay, so the online application I just showed you is step one, and that more or less puts you in the queue for the up to $10,000 of grant money. So you want to get that done as soon as you can. Then what will happen is the actual loan part of that SBA disaster loan will then be underwritten directly by the government. So that's what's different about this loan versus the other loan that we'll talk about, the Paycheck Protection Program. This loan is handled directly by the government. So once they receive your application and you've gotten through the grant process, you will be assigned more or less a loan agent from the government that will request additional information. Now, some of that additional information I have in these PDFs here, just to give you an idea, and this all comes directly from the SBA. So what they're going to want is this form, which is a personal financial statement completed for each owner of the business that owns 20% or more. Okay, so here's the personal financial. And like I said, this form is very common in business, especially if you have bank financing now, and you need to complete it and submit it as kind of phase 2 of the SBA disaster loan.
Hey, John, a lot of us owner operators who have debt notes every year have to complete a new PFS. Is
Okay.
it okay? Will the government be willing to accept one that we recently did for our SBA loans that we've already done in the past, or for the local bank we worked with, or does it need to be done on a government form?
No, this one I believe needs to be done on the government form itself. Banks will generally accept PFSs on any other sort of form, including this one, as long as you sign their application, and Sam can comment more about that. But my experience has been, if you provide a bank with this form here, all you have to do is just sign the bank's application, and that's enough for a bank. However, the SBA requires that you actually complete their form, this one right here.
That's really good to know, because I know that it was a little bit confusing, so thanks for that.
Yep. So you have this form, then you have, this is more or less just name, address information. This is a request for transcript of your tax return. So the SBA requires this, and all you're doing with this is giving them permission to pull your tax returns directly from the IRS. And the reason they want to do that is they want to compare the tax return you provide them with to the tax return the IRS has on file to make sure that they match.
Good. John, question here. Down in section 9 on here, it's requesting periods. Are they asking for just 18, or are they asking for 17, 16? How far back do you need to go?
It's 3 years. 3 years.
3
So
years?
right now it would either be, depending if you filed for 19 or not, would be 17, 18, 19, or
Yeah.
or 16, 17, 18.
So I did get a question while you were saying that, and one of them is that someone realized that they may have filed incorrectly, and they've already not filed, but they've already submitted some loan documents, and they might have submitted it incorrectly. Is there a way for them to self-repair that, or is there something they have to do to contact the SBA to manage that?
What they should do is, so like I mentioned before, this application has changed 3 times now. Those that filed under the first format and the second format actually receive a letter that tells them to refile under the third format, which is the one I just showed you. So what I would do is I would refile, take the 15 or 20 minutes and resubmit on the online application that I just showed you.
Yeah,
Great.
good idea too, because the first 2 versions of the application didn't allow you to check the box to get the $10,000 advance. So the SBA came out with an email this morning that said, hey, if you already filed your application, go back on the website, file again, and we'll match up the TINs, the taxpayer identification numbers, when we go to verify information. But that is your quickest way to get access to up to the $10,000 grant.
Hey, Dan, regarding that up to the $10,000 grant, you just mentioned something like I went through and filed it in a paper format like what you have here, John. But when I filed it myself, I didn't see anything that asked specifically, are you applying for the $10,000 grant? Is that now something that has come out this morning?
Yes,
Right.
so you're a perfect example of someone they're going to ask to reapply online. The very last question asks you if you'd like to be considered for the up to $10,000 grant advance. And then they ask you for your bank account number, your bank name, your bank account number, and your bank routing number, which tells us, they're going to be ready to wire funds. It's supposed to be within 3 days of your application.
And Tony, the SBA came out with an email this morning, and in it, in bold and underlined, said, in order to qualify for the advance, you need to submit the new application, even if you previously submitted an EIDL application previously. Applying for the advance will not impact the status or slow your existing application. That's directly from the SBA.
Okay, great. Great on one hand, crazy on another hand, guys, is that you keep on doing it, the next day they're coming out with something brand new. So I guess we have to keep our eyes on this.
No, we've been up day and night hearing different things, so we feel like we've got all the straight information now. But someone like you wouldn't have known that you still have to apply. And as of right now, you're not in the queue for the $10,000 grant.
Yeah, so I've got to reapply after this. All right.
Yep. So continuing on here, so the 4506T, and then there's a schedule of liabilities. So they're going to request this. Now, if you notice in the bottom here, they allow you to attach information. So you don't have to recreate the wheel. If you have a good set of financials, you're going to submit your financials. And under here, where it asks for accounts payable, all you have to put in here is see attached. And you don't have to retype all of your account payable information here. I would use this more for your longer term notes. If you have a note payable or a mortgage, list that information here. But any other liabilities, you can just say see attached schedule or see attached financial statements.
Are they seeking for anything? So you're saying they're seeking for things beyond debt service and mortgages? Are they seeking like lease payments or utilities or all of that? Or are you just saying to attach a P&L?
No, so we're attaching an accounts payable schedule.
Got
So
it.
you're going to submit your P&Ls and all that and your balance sheets. This is additional information beyond that.
Yeah.
So again, this all goes back to calculating damages. So they're going to have this schedule from you pre-disaster and post-disaster. So from a strategy perspective, the liabilities, if you're looking to obtain disaster funding here, the liabilities post-disaster should be larger than the liabilities pre-disaster.
Right.
So you want to make sure you're, somewhat strategic in how you prepare this information.
All right. And that's where guys can be helpful too in thinking through that.
Yeah, I mean, if you submit an application that shows your liabilities are unchanged or went down, you have no chance.
Right. Yeah. And how about, this is, there's two questions regarding this. We're seeing a few questions come across saying that people heard that if you apply for the 10,000, then you may not be able to get part of the PPP. Is that?
Let's address that because that's further in our discussion here, but let's talk about it now because that is a big question that we've been receiving. So you can apply for both. We've done a lot of research on that, and everywhere that we have seen, you can apply for both. The stipulation is you can't use both dollars for the same types of expenses. So for example, under the PPP loan program, that program is for payroll, rent, utilities, and interest on any of your debt. So the 4 items: payroll, rent, utilities, interest on debt. So you can use the PPP for that, and you can use the grant and this disaster loan for any expenses other than that. Also, if you receive the grant and you also receive a PPP loan, then the grant cannot be forgiven and has to be repaid. The 10,000,
Okay.
up to $10,000. So just an example, say you receive 10,000 in the grant and you're awarded 100,000 in a PPP loan. You will receive the 100,000 in the PPP loan. We'll talk more about that in a minute. And the $10,000 grant that you received, you have to repay.
Okay. So you'll talk more about the forgiveness piece and how that comes together in the future.
Yeah.
Okay. Yeah. One other question before we move on. A number of us owner operators don't pay ourselves salaries, and we take equity withdrawals and pay our staff salaries. But now there looks like there's and I guess this might be a question for the future here too, instead for the PPP, but it looks like up to $100,000 if we were to pay ourselves. And let me know if you want to just hang on to this question for the future here. But should we possibly put ourselves on the books as owner operators and pay ourselves through payroll?
Yeah, so there is a clause in here relating to self-employed, and depends how you're set up, whether if you're an S corp, you should be on payroll. If you're a partnership, you receive a draw or a guaranteed payment. If you're a sole proprietor, you receive a draw. And how it's worded is that compensation for the owners is based on the profit of the company. So if you're taking draws based on the profit, whatever your profit was over the prior 12 months, not exceeding the $100,000 threshold, that's the amount you can include for an owner. So if your profit was 50,000 over the last 12 months, then that's what you put in for yourself. If your profit,
how about if you were 112,000?
Then it's just 100,000.
You could put up to 100.
Up to 100,000. That's to calculate the historical payroll as well as the payroll spend once you receive the money. And we can talk more about that when we hop into the PPP, which we're just about ready to do.
Let you go.
Okay. And then this is one of the other forms as well that they require that you complete. This actually, some of this is in the initial online application as well. Actually, a good amount of this is, so they may not require this form again. But just to give you an idea of some of the different forms that once you get to the loan phase of the disaster loan, how this works. So let me stop sharing that and we'll get into the PPP.
Someone mentioned in here as a question before you share that, a lot of times we also own the childcare property under a certain under an LLC or the like that we lease back to the childcare businesses. They may not have employees, but is there a way to recognize damages for those entities?
Yeah, the way to recognize damages for those in the SBA disaster loan is through lost rents. That's all they have issued so far on real estate.
And Tony,
Okay.
the entities are related. When they ask you for all of your financial information, you're gonna be able to show, hey, how have you been impacted in total? That's part of the aggregation rules. So, if the child center can't pay the rent, it's all stemming from globally, you've been financially impacted. And when they go to calculate your loan, they're gonna use how you've as a whole been impacted to calculate how much you're eligible for.
Got it.
Okay, so let's hop into the PPP. So, which is also known, it's the Paycheck Protection Program. We've already, we were quick to come up with acronyms. This was a pretty easy one, PPP. This is from the U.S. Chamber of Commerce. So we try to go to the main source of information when we're providing information ourselves, because I'm sure everyone is just like myself. We're getting inundated with so many messages, so many emails. I had a client today send me a video from Fox News that was incorrect. And he was pretty adamant that this guy that was speaking was correct, and we fact checked him and he wasn't. So you got to just be careful with all the information that you see and what you hear. So basically, this is part of the CARES Act. They allocated $350 billion to small businesses, which are basically, there's a couple rules as far as small business. My guess is everyone on this call is fine. But based on your industry, there's a revenue threshold, and there's also a under 500 employee threshold. So the first step is you got to make sure that with any SBA loan that you meet the small business standards. 350 billion was set aside, and it sounds like a lot of money, but quite honestly, I don't see this money lasting very long. There's not too many barriers of entry to apply for this loan. And if you think of every company in the US that has 500 or fewer employees asking for funds, the money could go rather quickly, and I expect that it will too. So here's the Paycheck Protection Program. The big piece of these loans is that they can be forgiven. And we'll kind of talk about the rules on this. And these aren't quite yet, and Sam could talk more about this, but these aren't quite yet ready. As of right now, you can gather information and talk to your bank, but they're not ready to receive these applications quite yet, is what we understand so far. Like I said, Sam can talk more about that in a little bit. All right, so are you eligible? Here's some of the eligibility requirements. It's the same type of questions that they asked on the SBA loan application. Small business with fewer than 500 employees. I'm assuming that's just about everyone on this call. That would cover you right there. And you can kind of see some of the other ones.
John,
Yep.
Quick question on that, just because of some of the larger businesses who've been, if there's a private equity investment in a childcare business here, and they have other private equity investments, are they seen as their own standalone, or are they aggregating that private equity company?
No, I would see them as their own standalone based on the federal ID number of the child care center here.
All right, fair enough.
Yep. So then individuals, sole proprietors, independent contractors, it covers, just about everybody here. We actually were talking with Country Club, and I think they're excluded. That was one industry that we couldn't find, that qualified. So we're assuming we're all eligible. So now what are the lenders looking for? This is some of the criteria that's included. In evaluating eligibility, lenders are directed to consider whether the borrower was in operation before February 15th, which I'm assuming we all were, and had employees for who they paid salaries and payroll taxes to, or paid independent contractors, right? And then there's not a lot of qualifying that is required here, unlike the SBA disaster loan. There's more there's more of a requirement to show damages in the disaster loan as what we can understand there is here. What lenders aren't looking for, which are good things, if you have access to credit elsewhere, this was part of the original SBA disaster loan, that if you had access to credit elsewhere, if you had savings or if you had a line of credit with dollars available, then they expected that you would exhaust those funds first before you applied for a loan. Well, they waived that requirement for SBA disaster loans in the CARES Act, and it's also not a requirement under this one. So you could have essentially millions of dollars in the bank and still apply for this. You don't have to personally guarantee it. It's not required. And you don't have to put up any sort of collateral. So this is more or less a borrower's dream.
So John, the PPP, is this realistically the main harbor for the CARES Act that we're focusing on, that really where everybody is getting mainly focused as to, because this is where the forgiveness is too?
Absolutely.
Yeah, so just to give you an idea, out of the $2.3 trillion that the government is offering, this is 350 billion of it. So this is a significant portion of the act, and when you compare that with 290 for stimulus checks and about 500 for private loans, this is a significant portion of the act, and this is where the government really wants to pump money into businesses, small businesses.
And in addition to yourselves, this is where SBA lenders can also be helpful, correct?
Absolutely.
Yeah. So Sam, are you on?
Yes, I am.
Great. If you don't mind just jumping in, we'll have you talk a little bit later, but if you don't mind just jumping in here for a second. For those of you out there who joined the call a little bit late, Sam is also with a regional SBA lender who can be very helpful in this. You know, what is sort of the guidance you're getting when it comes to the PPP? And I know everything hasn't been defined yet.
Yep. So I did speak with the local Rochester SBA rep this morning. And, you know, she stressed that while this information is out there and we all have access to it, it is all subject to change. John and Dan, I'm sure you guys are aware of that. These things are changing daily. But until the final regulations are out, we won't know, you know, the exact details of this loan. However, the basics are exactly what John has gone through. One part of the CARES Act that I do want to point out that doesn't seem to be too many people talking about is that if you are an existing SBA borrower, being 7A, Express, or 504, the SBA is going to make those payments for you for the next 6 months. And the borrower will not be responsible for those payments. So that is sort of a grant, another grant, 6 months of payments on existing SBA loans.
Well, that can be
so
huge.
If you are an SBA borrower, you may get some relief for the next few months.
And should you be going to who you borrowed from for that?
I would assume so. We have not received guidance on how that is going to happen. I assume it's going to be a nightmare to try to collect, as a bank, to try to collect these funds from the SBA, but I'm hoping that they have an idea as to how they're going to do this.
And
Great.
Sam, I spoke with you last night, and you know, that's a great point that you bring up, especially for individuals that purchase child care centers, because a lot of times they used a 7A loan program, which was perfect for them. So that 6 months is going to be very good. It also applies to future 7A loans that are made before, before I think it's September or December of this year. The SBA is supposed to make it pretty automatic, according to who I spoke with last night. But it will be a nightmare for the banks. Luckily, hopefully for the borrowers as well.
Okay,
Right.
Great.
Right. Yeah.
Yeah, thanks, Sam. That's a great point. I mean, I'm back on the SBA website here, and it's right here, SBA debt relief that you mentioned. So they don't have a ton of information here, but under the program, the SBA will pay the principal and interest of new 7A loans issued prior to September. and they'll pay the principal and interest of current 7A loans for 6 months. I mean,
That's huge.
And
Huge.
another important caveat of that specific program is if you've already contacted your bank and asked for deferment, which is not a waiver of principal and interest, it's just a deferring either to the end of the loan or for 3 months, and then they'll add it to your payments. The SBA acknowledges the deferment, and they will start making those 6 months worth of payments for you after the bank's deferment. So
Right, that's right.
2 or 3 loan payments that were deferred, the SBA will pay 6 months after those 2 or 3 months are up.
So that's a really good point that you've made here, Sam, Dan, and John. One of the things that a number of us were in, no one saw this coming. There are a number of us who were in the middle of a transaction to actually acquire other centers. Okay. This seems like it's almost motivating and inspiring us to finish out and make those acquisitions happen. Is that what I'm sort of reading in here, or is that being too aggressive?
no, I mean, it says until September 27th.
Yeah.
Any new loans up to that point, they'll cover 6 months.
Absolutely, Tony.
Right.
That's the message here, is that they want to keep activity going. They want to keep activity in the economy going in general. But this is a way to say, for these 7A loans are meant for very specific industries and businesses, and I'm sure Sam could speak to that as well. Child care centers being one of them. They want to keep that activity going. So you certainly want to be motivated to keep the due diligence process and the financing process going during this, if you can.
And Sam, does this apply to express loans too? So let's say that you already have an existing facility, you were going to add on, or you're going to redo the interiors or things of that nature. Would something like that apply for this?
Yeah, it does. The Express program is included in that payment, in the payment by the SBA. The other part of the CARES Act that applies to the Express program is they are increasing the limit from $350,000 to $1 million on the Express program.
Wow.
So there'll be a little more SBA money available.
Well, how about, and one last question before I hand it back to John and Dan. How about early repayment? So let's say that you do a SBA loan between now and September, and you are able to, borrow, let's say, 800,000, and you want to do an early repayment. Are there any penalties for early repayment under that?
No, there are no prepayment penalties, early payment penalties on these loans.
Okay.
If you're doing a new, let me just take a step back. If you're doing a new 7A loan that is not a PPP loan, any loan with a term of greater than 15 years would have a prepayment penalty.
Okay.
And that's on under the regular 7A program, not under the PPP program.
Okay, great.
Jim, can you quickly touch on the fact of how the SBA is increasing their guarantee percentages to make it easier for banks to lend? Is that true?
So, yeah, so on this program, the banks are getting 100% guarantee. So there's essentially no risk for the bank, which is great. And it should result in abbreviated underwriting, which would lead to quicker turnaround for the borrowers. So I'm sure that we're going to have to do some sort of underwriting to accommodate the bank examiners, but we've essentially got very little risk in making these loans, and I think that's the point of the program. The banks will be very incented to make these loans. Now, there's also a 6 to 12 month payment deferral on these loans, so the bank isn't going to be taking in any payments or income. And John, I think you're going to touch on the forgivable nature of the loan. The banks aren't going to make a lot of income on these loans, but that's not really what we're here for right now.
Okay.
The banks, the SBA is going to be giving the banks a fee for processing the application, which will supplement that lost interest income on these loans.
All right, very good. And so why don't we hand that back to John so he can get back to the PPP. Great information on this, Sam. Thank you very much. One other quick note, we have a lot of questions that are coming through. I've asked Hans to try to capture as many of them as possible. So we're going to try to come back with a frequently asked question after here if we missed your question. So our apologies if we can't get to everything, but let me hand it back to you, John, so you can push through a lot of these questions as they're coming in proactively here.
Okay, great. Thank you. So let's get in. We'll move quick through this part, and then so we can answer as many questions as we can. So how much can I borrow? So it's pretty simple, the formula on how much you can borrow. You can borrow 2.5 times your average monthly payroll cost, not to exceed $10 million. So what you have to do is review your payroll over the prior 12 months. So that would go from the period of February 1st, February 1st, 2019, or actually March 1st, 2019 through 2/29/2020. So you take those 12 months and calculate your average monthly payroll, multiply that times 2.5, and that's the maximum amount that you can borrow. Okay, now there are some questions within that if you have employees that you recently hired or employees that you terminated, but let's just kind of look at what's included in the payroll costs. So the sum of payments of any compensation respective employees that are it's salary, wages, commissions, or similar compensation. It's payment of a cash tip or equivalent. That's more in probably the restaurant business. Vacation, parental, family, medical, or sick leave. Allowance for dismissal or separation. Healthcare benefits, including insurance premiums. Payment of any retirement benefits. That'd be if you have a match on your retirement plan that the company's paying, that's included. And then payment of state or local tax assessed on compensation of the employee. So that's the state portion. The FICA portion or any federal tax is not part of the payroll cost. So the payroll cost isn't just wages. You know, it's beyond wage, more or less wages plus most of the benefits. So that's what's included in your dollar amount. For any sole proprietors, independent contractors, and self-employed, this was a question earlier, the sum of payments of any compensation or income of a sole proprietor, independent contractor that is a wage, commission, income, or in your case would most likely be net earnings from self-employment or similar, and that's an amount not more than $100,000 in any given year. And that is also the requirement for the included payroll costs. None of the payroll per individual can exceed $100,000. That's mentioned down here in the excluded section. So excluded would be any payroll over 100,000. Payroll taxes, so that's more the FICA piece that I mentioned, FICA and Medicare. No income taxes are included. Any compensation of an employee whose principal place of residence is outside of the U.S., so that could be important. And qualified sick leave, which just came out relating to the Coronavirus Response Act. So that's if you have any employees that have been infected by the coronavirus and you have a separate credit for those employees right now. So this is what's included in the payroll costs. It's the average of the prior 12 months times 2.5, and that is your maximum loan amount.
Okay, that's for the PPP, your maximum loan amount.
Yep.
So what you would be submitting to the SBA for request.
Right, and that's your maximum loan. That doesn't mean that will
Right.
be your loan.
Yeah, and court with this too, is there a prepayment penalty if you were to, like, let's say overborrow and realize you're not going to need as many funds? Would you be able to prepay early?
No fees, no prepayment penalties.
All right, very good.
But
How about,
go ahead, sorry.
no problem. Some people have gone through a lot of changes in the past year. You know, one of our members I know alone She has acquired a number of different centers over the past year. So, you're going to see sort of a hockey stick for her in the number of employees she has and the benefits and everything she's paying out. Is it just a consideration with that, will they look back another year, or are they just looking at 2019?
No, so they're going to look at the prior 12 months. This is now you're going to look at your prior 12 months payroll and calculate what that is times 2.5. That's the calculation of the maximum loan. Now we want to look at the potential for it to be forgiven. So when you look forward, one of the criteria to be forgiven is that your head count, your average number of FTEs, which is down in option 1 at the bottom here, per month from February 2019 to June 2019. That's one option. If you have, let me see that part. Right. So they're going to look at that period and then look at the period of January through February of this year to see if your employment has gone up or not, or stayed the same. So one of the requirements is that your head count more or less doesn't decline from last year to this year.
Okay. Good.
That's option 1 for the forgiveness piece. Okay, the other part of the forgiveness is up above. So let's say you're awarded $100,000. Once you're awarded, you have an 8-week period to more or less start to spend that money. And what you can spend that money on over that 8-week period are the items down below here in these bullets. Payrolls, number 1. Interest, now it's not just on mortgage obligations, it's on any of your long-term debt. Rent on a leasing agreement, payments for utilities, and then for borrowers with tipped employees, additional wages for those employees. Okay, so over that, if your loan was $100,000 and you spent $100,000 on these items over the 8-week period, your entire loan would be forgiven. If you spent $80,000 on these items over that 8-week period, then $20,000 would not be forgiven, and that would turn into a 10-year 4% loan. If you didn't need that other $20,000, there's no prepayment penalty, so you can just pay the loan off and not have a debt.
It's good to know. That right there is good to know.
Yep. And the other part of this is, like we talked with the SBA disaster loan, if you are awarded a PPP loan, you can't use the disaster loan for any of these items here. So the PPP loan is for these items. The disaster loan would be for supplies and other overhead that isn't listed here.
So John, I have a question for you. We have payroll, and this is happening to a lot of us. January, February, we have wait lists, which meant that our centers were full. We had full staff. Our centers on average if you have a 100 enrollment center, you have probably on average almost about 20 employees, give or take. And now what we're seeing is, for some of the centers have been closed altogether, so no one's working, and it's state mandated. So that is important to understand. How do you handle this if you're required by the state to close? Or we have like essential and non-essential, like with my centers, I know that I'm down to about 20%. So then we have such a decrease in staff that it will also take time to build up that staff again. And there's opportunity to try to bring people back on to do cleaning, to do organizing, painting, whatever. Do you have any thoughts about that for the ones who've been mandated to close and how it affects them now, as well as the ones who have dropped significantly and realistically, I think it's saying, it's trying to inspire you to bring staff back on, but if you can't even open.
Right. So this is kind of the bottom part here. What if I bring back employees or restore wages? So that's what you'd want to do. So the whole point of this loan is to keep people employed or bring people back that you had to let go because of what's happening. So they give you more or less a 30-day window in order to hire people back. So the whole point of this loan is that by the time you can apply for this, you do apply for this, you go through underwriting, you receive the loan, and then you start to use the funding, you're going to use that 30-day window to hopefully bring most of your people back and be back to normal. And this month, the intention of this money is to get you back to normal. So you really got to, keep an eye on that 30-day window so that as much of this loan you receive can be forgiven.
And when does that 30 days start? From the approval of the CARES Act this past Friday, or is it from February, or do we know when it's from?
No, it starts from the approval of the CARES Act, right, Dan?
Yeah, so that's the bottom part that the U.S. Chambers kind of put out. So this is, again, one of those things where you're getting conflicting messages from the different government agencies. But as we understand it at the moment, and this is in the bottom of the Chamber's guide, that if you reduce your payroll between February 15th and 30 days after this act came into law, then you can bring your people back on before June 30th and not be penalized. The other important part with that is if you bring your people, you want to bring your people back if you get approved for this loan because you need to spend it on payroll. So that's going to be your biggest expense that qualifies for forgiveness. So you're going to need to coordinate, hey, can I even bring my people back because are there kids? And does it make sense to do so? And when you bring them back, that's what you're going to spend this Paycheck Protection Loan Program on. And then one of the common questions in the group chat that we've been having here is, well, if I laid my employees off and they're getting unemployment insurance, they might be getting more money on unemployment. And our response to that, after talking with some HR consultants and payroll companies and benefit attorneys, is, if you offer an employee a job, they're no longer actively looking for work, and therefore they would no longer qualify for unemployment if they said no. So that should help in getting your employees back. It's not an ideal situation, especially from a morale perspective, with everyone scared to come back to work. But that is one remedy that employers will have to help use this paycheck protection loan if you get approved.
So let me add something to that, because that is a bit of our background with IC360. We are going to try to put together some kind of documentation as templates of how to look at trying to solicit your staff back to work in a very positive, proactive manner, because they do have a competing interest. If we don't have work for them, they do get this substantial unemployment. But if we do have work for them, then they will actually disqualify themselves for unemployment. And in turn, you want to try to bring back that positive culture that you've had. So we're going to work on trying to get some decent kind of templates out to you folks for our membership. So with that said, though, that's a very good point. So just hand it back to you guys. I know we're really at the top of the hour, but I know there's an awful lot of interest here still. And so I would say we should continue to go here probably for about another 15 minutes or so. And again, I think we're going to try to capture any kind of questions. And Dan and John and Sam, I hope you'd be okay with helping us with some frequently asked questions after this.
Yeah. Tony, maybe that's what
Sure.
I think now's a good time to maybe open it up to some of those common questions. And then, one other thing before we do that is we do have our resource center here that John's pulling up on the screen. So we've tried to, use our resource center to pump information that matters to small businesses. So we strongly suggest checking this out, checking out the resources from the Chamber of Commerce, and other areas like that. And then we've got an email list. If you go to this resource center, you can sign up, and we'll be sending out blasts and daily calls that you can connect with us and get relevant information.
All right, very good. So we've had a number of different questions across the board overall, and one of the things that I think is going to be, it sort of comes to mind for myself is it's a little bit of chicken and egg. are you having to wait until the loan comes through and you actually get the money in the back to bring staff back? Or is this incentivizing you to try to do it even before you get approved for the loan on the bet that you will get the loan?
No, you have time. So you'll have that 30-day window. So more or less 30 days from when this was enacted. So it takes you to about the end of April
Okay,
in order to bring people back. So the reason they've got the banks involved is because they want to move this money as quick as they can. Hopefully this $10,000 grant starts hitting bank accounts by tomorrow.
right.
It should give you enough of a window to be able to hire people back after you have the funds.
And speaking of that $10,000 grant, and again, I think you said, if you get the 10,000 grant and if you get the PPP, you won't be forgiven for the $10,000 grant. That is money that will be basically deducted out of the PPP. Is that accurate?
That's accurate. Yep.
Okay. So if you then have that on that $10,000 grant, is that sort of like you use that for whatever you need just to stay in business? You don't have to talk about where it goes or what it's being used for as long as you're
Yep.
applying it to your business?
It's a way to get money to people this week for all the critical things they need to pay.
Right.
Yep.
Okay. Someone asked an interesting question. I don't know if we're going to be able to, but if unemployment, and this is something I know you and I talked ahead of time, that this is not an area you specialize in, but the money that's coming in for unemployment, is there a way to like temporarily increase staff's wages to have them come back to incentivize them?
Yeah,
And
again, we're not HR payroll specialists, but to me, that's a business decision.
Yeah.
Sometimes you need to, issue bonuses and increase pay for various different reasons. So I don't see why you wouldn't want to do it here.
Yeah,
So it does seem like there's an opportunity to do a bonus of some type if people come back in a timely manner and engage.
Yep.
Yeah, I mean, again, Tony, it's a business decision, and as John pointed out, you want to talk with a payroll specialist and HR specialist to talk about that, and at the same time, reminding people that if you offer someone a job and they say no, they're no longer eligible for unemployment. So, to your point, you want to be positive, you want to bring people back, but there's a little bit of a lack of incentive for people to say I don't want to come back because they'd be eligible for nothing.
Right. Now, how about if you are running a nonprofit organization? Is this all still in effect for all nonprofits?
Yes.
Okay. And there's a number of businesses out there that possibly couple where unfortunately you might be under one tax ID, but you might have multiple business entities that are under one tax ID. Maybe it is a property management company, maybe you're associated with some other kind of a cafe or something like that. How do you sort of split things up, or is this something where you're gonna have to get discreet with your CPA?
Yeah, I think it's the application is on a federal ID number basis. So if you just
Okay.
have one federal ID number with multiple different businesses and divisions under it, it would be
Yeah.
one application, one pot of money. How you decide to allocate that would probably be up to you, unless the bank or SBA have other requirements that they'd like to see.
Sure.
I do
And
have a
then,
question actually for Sam as well on the level of financial information that's required for the PPP loan. We just had a client ask us for CPA prepared financials for the last 3 years. And we weren't sure what they meant by that as far as compilation review audit, or is it just fine to have an internal financial? I don't know if you know that or not.
We just don't know at this point. We really don't. Like I said earlier, the loan is 100% guaranteed by the SBA. So I can't imagine that the banks will be doing a full-blown underwriting and require a very high level of financial statement.
Right. That's all right.
Yeah, we really don't know what our underwriting process is going to be when we start taking these applications.
Okay. Thank you.
Unfortunately.
So, one of the things, Sam, is if we have, sort of that, when will you be able to make PPP applications? Till I know John mentioned up front that 350 billion is going to go. Okay, so it's not like you really want to sit on your hands with this, but do you have a sense of how long you will be able to make an application for the PPP, or is this something that you need to get done within April, or is it going to be a lot, are you going to be able to extend that out?
Yeah, we don't have a sense of how long. We don't even know when we're going to be able to start taking applications.
Okay.
The sense that I got from the SBA was that it should be this week.
Okay.
So we're hoping that it's sooner rather than later.
Yep. So I just want to make sure we have a lot going on in our chat group, and a lot of people are chatting with each other, and that's completely fine. Just want to recognize that there is a lot of sort of hearsay going on out there, and I know that RDG and Partners is doing their very best to try to bring some clarity to it. So the website is a very good resource. Sam, did you have any other comments before we were to move on?
Just a couple. You guys did a great job explaining both loan programs. I just wanted to stress that the banks are still waiting for guidance from the SBA as to how to take the applications and how to process the applications. We think it's going to be a very similar process to the existing 7A, and there might be a supplemental schedule or two that goes along for the PPP. One thing I do want to stress is that make sure you look at the final regulations on this loan, because, as John alluded to earlier, these things are changing every day. I got some information today from the SBA that she actually thought they might be including more expenses in the calculation of the loan amount. So that may be different. We've all been hearing that it's 2.5 times the payroll expenses, but there might be some other things included in that. So just make sure that they look at the final regulations and see how this whole thing shakes out.
All right, great. Any further comments, John and Dan, from your point of view? I know we've gotten a number of questions, but I'm trying to probably bring this to a little bit of a conclusion at this point.
Yeah, no, thanks for everything. I know it's confusing. We're still learning every day. We're on top of this. We've put together a team of over 10 professionals, CPAs and accountants that are working on this all day. And they have been for the last 2 weeks. We've been through this before, unfortunately, with 9/11, and understand a lot of these government programs when they come out. I mean, this is even more expansive than that one was. So we're learning about those programs, but if anyone needs assistance, we offer that. We can help. We can help you put your applications together and submit them and make sure that you send everything properly. Because what you don't want to happen is that you missed one piece of information and now you get to the bottom of the pile. So
Yeah.
you gotta
And I think what you show here, John, alone, that having a consultant or the support might be valuable. I guess a question for you is if you use a consultant like yourselves, can the cost of the consulting be covered as an expense?
not that we've seen. If you're allowed to use a consultant, you have to disclose who your consultant is and what you're paying them. They can't work on a commission or a bonus or any sort of contingent structure. So all of our consulting work, we charge a retainer and we charge a hourly rate, and we apply the retainer against that.
Okay.
I'm not sure if it can be included or not in the loan amount.
It probably wouldn't hurt for you guys to figure that out.
Yeah, I know. We'll probably have to go on someone else's webinar to figure that out.
Yeah. So, gentlemen, also, do you mind if I ask you if things continue to evolve, if we can maybe pull you guys back together to have a follow-up to this maybe at some point?
Yeah, it'd be great. We're doing at least one a day for our network and our client base. So we'd be happy to continue to do these or invite you to some other ones we're doing, however you want to do it. Yeah.
So everybody, I want to greatly thank you all for joining today. I know we've had a tremendous amount of questions. We're going to try to capture those questions. We're going to try to consolidate them down, and we're going to try to get to a lot of them. We probably won't be able to get to every one of them, but we're definitely going to try to get to as many as possible, whether you're a member of Inspire Care 360 or not. You know, again, we're trying to figure out ways. We're all in this together. Big believer of high tides raise all ships, and we're working together on it. I think we have to just be, you know, slightly cautious on being overly confident on exactly, you know, what's out there unless we've experienced it ourselves. But I would say that there are a number of professionals here like RDG and partners, as well as Genesee Regional Bank, who really have their hands around some of this stuff. So we will be able to get you in contact with them too. But the frequently asked questions, I'll probably work close with Dan and John as well as Sam on that. And we'll look in the next couple of days to get something out to you folks. So with that said, we have recorded this and we will be making it available before the end of the week in replay, and we'll try to hustle on that. I know Hans is juggling a lot of plates, but we're doing the best we can to try to get information out to you. Do not hesitate to ask more questions and emails to us, and we will see what we can about additional topics that might be above and beyond sort of the accounting, consulting, and the banking side of it. And we'll see what we can do to be as helpful as possible in the other areas. So thank you all so very much. Appreciate your time. John, Dan, Sam, thanks everybody. Enjoy the day.